really talking about getting on your business and what the incremental steps are. So one of the things that we committed to from a value added standpoint here, for those of you that join us on this Triibe journey, is that we really want to give you actionable steps, not just a high level view, but say what you need to do and why you need to do it, so that you can then take that information into your business and act on it right away. So these are, and we've broken this down into 2 steps. So we're going to have this session, and then in a couple of weeks we'll continue on this conversation about business planning. But we broke it down into these steps. Set a goal, know what your destination is, know your numbers so you can understand where you are. So the goal is like, you know, where you want to go, and then the numbers are the "you are here" dot on the map, right? And the plan is the route, right? There's a lot of routes that you can take to get to where you want to go based on where you are. Your plan will tell you which route you're going to take. We want to talk specifically about what we feel is a mission critical part of 2021 business planning, which is diversifying your referral partner base and building out your team. And those 2 are very tactical, but the real core elements of business planning is set the goal, know your numbers, make a plan.
Yeah, and I think, you know, let's just start on this first part, setting a goal. So, you know, one of the things I would like to be vulnerable about and admit is a lot of times I'll go to these sessions and I'll just give my canned answer without like a real exploration. Hey, Mark, what's your why? Well, I've got my answer. You know, it's right here. Hey, set a goal for your business. Write a goal down of what I want to accomplish. And to my credit, a lot of times I would accomplish that goal just because I wrote it down. What I really want to encourage you to do is do some exploration. What does your business really need? What is the next step in your business? What makes you happy? What makes you, what do you hate, right? What's zapping all your energy and causing you not to be the best you? You know, we just talked about giving your team a break. You need a break too, right? And so when you go to set this goal down, get grounded, get by yourself with a piece of paper and think about your business. And write down, like I'm doing it right now. I'm taking catalog of everything I do in 15-minute increments for the next 2 weeks. And I've done this several times, right? But I'll look at those things and I'll say, what is it that I would really like to get away from? And if I got away from those things, what could I do with that extra time? Would it be better? Do I still need to take those things? I'm being really honest about it. But in case that resonates with any of you, I don't know how many times, how many years I've been just going through the motions on goal setting, right? So this year, I really want to challenge all of us to get really real with setting your goals. Instead of, I mean, if you're not going to do anything, set up and go through the motions. Because like I said, if you just set a goal, you'll get it. But think about these goals. To Danny's point, diversifying your realtor base is quite arguably one of the most important things to do over the next 12 to 24 months. So think about your goal. What is going to give you traction? What's going to give you happiness? What's going to bring you better results, right? But actually go through some exploratory, time with yourself to just think about what it is that you're really trying to accomplish versus showing up to a goal planning session with your team and just writing something down, right? Which I have been guilty of doing several times. So I just wanted to put that out there.
So, and one thing I'll offer that I think is really important as it relates to goal setting for 2021 is, and most of the time when I sit down with the loan officer or a mortgage team, and I'm personally doing that coaching process of goal setting, the goal is anchored around income, and that is totally fine. I don't want to discourage that at all. I'm likely one of the most capitalistic individuals that you'll ever meet in your life. So anchoring around your income goal is totally fine. However, I want to offer 2 thoughts to this. When you write down your income goal for 2021, ask yourself why. Why is that the number, right? That, like, what is important about that number? Does it need to be there? Does it need to be higher? Does it need to be lower? What if it was 20% higher? What if it was 20% lower, right? What would that mean for your life? What it would mean for your business? How would you have to reorient your time, your energy around the higher or lower figure based on choosing it? And you're going to hear me talk about this pretty consistently over the next 6, 18, maybe forever on this Triibe journey is when you look at your 2021 number, and then when we have the same conversation for 2022, ask yourself if you're anchoring that number in what you did in 2020 or 2021, if it's this future point, versus what you really believe the goal should be. And the reason I share that is that, and this is me getting vulnerable, 2016 was my best year ever, and I haven't been originating for a little while, but 2016 was a great year for me. And 2017, it was very, very emotionally to kind of track the fact that it was so much harder to earn income than it was in the previous year. And it hit me hard. And I know this happened to a lot of loan officers because I had a lot of conversations with them in 2017, that I wasn't able to keep the pace that I was on in 2016. So I want to offer up that there will be a time, it may not be next year, because depending on how things go, next year could even be bigger than this year, but there will be a year where you cannot reach that previous high water mark. And if we're not prepared for it and asking the question, why is that the right income number, then we can get caught flat-footed and have some emotional energy that doesn't serve ourselves, our lives, or our business. So just wanted to throw that out there. When you pick that goal, which it's okay to be a business, a financial goal, ask yourself those questions.
Really well said, man. Know your numbers. When you're starting your business plan, it is imperative that you know your numbers. How much refi business did you do? How much purchase business did you do? Where did your business come from? How many referral partners do you have? What was your business? Was it government? Was it conventional? It's important to track all of that. And I think getting a CRM is very important. It's probably more important now than it's ever been. I feel like I keep saying that about everything, but it's very true, because technology is coming. You can feel it. If you're awake right now and you see what's going on around you, technology is coming. And so, getting a CRM is probably more important than ever, but the best CRM is the one that you'll use. And I struggled forever. Danny was a mentor to me in that. He was so far ahead of me with his CRM. And every time I looked at it, I just got so overwhelmed. But I used 2 Excel spreadsheets for probably 15 years, 14 years of my business. And only, 3-4 years ago did I really adopt a CRM. And those Excel spreadsheets were awesome. I was a great producer with 2 Excel spreadsheets, one for my leads and referral sources, and one for transaction management. So if you're struggling with a CRM, I would really encourage you to break it down to the same thing that Danny has laid out here for you. Set a goal with your CRM. Once I said, look, I just want to get my leads in there, and I want to be able to manage my transaction in there. I don't care about fancy marketing or automatic triggers. I just want to get these 2 Excel spreadsheets in a CRM. And once I set that goal and got my team's buy-in around that goal, it made tackling the CRM so much better. And what naturally happened is, well, then we started managing our transactions. Pretty soon we had birthdays. Pretty soon we had, automations around trigger points and getting rid of some of the emails. And over a couple of years, it was a process. It all came together. But Danny, this is something where every loan officer that I talk to says that they want a CRM, but nobody knows better than you that sometimes a CRM can be a full-time job, and people are scared to hire somebody to do a CRM full-time when there's so much need for bandwidth and everything that seems more important. So what's your perspective, being much more advanced on the CRM side than I am?
So I'll offer 2 things, and then I'll get pretty granular on what knowing your numbers should look like. So the first is that if you have a properly executed CRM, it will function like a full-time employee. So you'll actually be able to replace an FTE on your team with your technology. I'm absolutely confident in that, and I've seen it happen. And not only that, you'll actually see the productivity of the rest of your team increase. And that's because if you properly execute your CRM, everyone will know what their job is. And that's one of the greatest challenges for teams, and I'll kind of reference back to, a comment that you made earlier in reference to Tim, Mark, is that many of us didn't sign up to be leaders. But once we got to a place where, we started inviting people into our businesses, you immediately become a leader, right? Because you have to direct that person's time. And one of the hardest parts of leadership is clear communication. And specifically what I'm referring to is role definition and accountability around role definition. And a well-executed CRM helps people get very clear on what their job is and what's important now, right? So that win philosophy, what's important now. So the CRM can communicate to the team what they need to be working on that hour, that day, that week in order for your team to be successful. So and this is where I want to get granular on knowing your numbers. So you should be thinking about your numbers in two ways. So one way is the lagging indicators, right? So this is an easy thing. I'll define some of these, right? Fundings, number of fundings, right? Your commissions that you've gotten, the units closed. That's the greatest lagging indicator in your business. And obviously it's mission critical for you to get closings because that's what pays the bills. But you should also be focused on your leading indicators, right? What actually gets you to the fundings and really back that all the way up, right? So before you can get a funding, right, you need to get a loan locked and in process. And before you can get a loan locked and in process, you need to have a consultation and convert that to a lock. And before you can have a consultation, you need to get leads. So each of those is itself a leading indicator to the following lagging indicator, right? So lead goes to conversion. So the leading indicator is the lead, and then the lagging indicator is the conversion. And you want to measure those two things and then measure your rate of conversion from one to the other. And then even before lead, right, you have your marketing, your prospecting, your solicitation of referral partners. That's all leading indicator activity work that then gets you leads, right? Your database management influences how many leads you get. So when we're talking about knowing your numbers, and to your point, Mark, this is overwhelming. I can feel it through the computer that there are now going, oh my gosh, that's too much, right? That's too much for me to do. But what this comes down to, and the reason business planning is so important, is that you're treating your business like a business, right? And you're laying out the roadmap so that you're converting the chaos of your business into bite-sized chunks that can be attacked. And the other thing that happens when you know your numbers at this level is that you can really find out where the drop-off point is. And what I mean by that is, let's say your goal is to get 12 fundings a month. And you need to get, so many locks, so many consultations, so many leads in order to get to the 12 fundings. Well, it could be that the challenge is that your lead to conversion is really poor, right? Let's say you get 100 leads and you're only converting 15 of them. But then from conversion to you're getting those, and all 15 of those turn into 12 fundings. That's a great pull through from that point on. But you should be asking yourself in this hypothetical example, why am I only converting at 15% of my leads, right? And then you can really get focused on that area of, and again, this is curious, right? You're getting curious about your business. Wow, I'm only converting at 15% lead to consultation. What's going on there? Once I get them on the line, they're in it to win it. But what's happening right here? And that's what knowing your numbers really can do. And your CRM can help you capture the information and then create visualization around it if you've executed it properly.
Yeah, I think that, one thing I want to comment on, this takes me back. I was in a core summit. I was listening to Shayla Gifford, and like me, she was talking about just trying to get more and more and more and more leads, because she wanted to close more deals, and 100 leads coming in, converting at 20%. Man, I need to get that to 120, right? So that I can take my 20 deals, and if I get 120 leads, I take it to 24. Well, what she realized when she started to track this conversion rate, which you can easily do with the CRM, is tweaking the conversion rate to 25% versus 20 gets you 25 deals with no more leads, right? And I think you know, as a salesperson, I'm the guy that's like, it's my job to go hunt. I've got to go, you know, bring more food to the table. And I think getting out of this, we didn't sign up to be leaders, right? But getting out of this and thinking like your own CEO, looking at this conversion rate and tweaking one small thing. You know, I tell the story all the time of how I took one of Danny's ideas from a talk I heard him do and implemented it. And one small thing, you're converting at 5% better. Now you've got you know, 5 more deals times every single month for 12 months. That's 60 more deals a year. How much more income is that? Times how many more years? And you just keep refining and tweak and tweak and tweak. But if you don't know those numbers, you're just like me. You're like, I got to get more business, right? And I think you can work smarter if you're actually looking at these metrics. But it's a process. Like, this was so daunting. It took me, I was like the guy who really wanted a CRM, but I didn't really want a CRM. It's one of those things that sucks energy away, right? It wasn't until I figured out, how can I implement this thing, but I don't have to like build it and do it. And so it can be done. And these are the things that I mean. You have to really think about it. And anytime that obstacle presents itself, like, oh, this is too overwhelming, I'm just going to stick to my Excel spreadsheets. No, that obstacle is the way. You know, and I think, you know, all of that hopefully will start to crystallize for you, because this CRM piece is so important to be able to get granular and make these calls. If you're not even tracking it, or if you're doing it manually, you're working too hard. This can be a full-time employee for you and your team. It just takes massive focus to get it up and get it going. And then once you get it up and going, you can build, you can refine, you know, you can go forward, but you won't know that stuff if you're not really looking at your numbers.
And I guarantee you this too, Mark, anybody that is, you know, growing their business without using tools, technology tools like a CRM, they're missing opportunities. Because there's only so much bandwidth our brains have to hold information and create prioritization and execute on that prioritization. It's just not possible as a business scales to do that without some reservoir for those contacts and those commitments. And the other thing I'll add, and this was kind of transitioning into the next bullet point, which is making a plan, if we want to pull that presentation back up, is that when you're making a plan, right, you have to, you know where you want to go, you know where you are, and then the route you get there is going to be determined by how granular you got with your numbers, right? So it might be, to your point, Mark, that the thing that's going to get you to your 2021 target is actually curating your referral partner base and whittling it down so that you make space for new opportunities, or focusing your energy on those realtors or planners, divorce or real estate attorneys that are providing you the highest converting leads, right? So you can have one realtor in 2020 that gave you 100 opportunities, you converted 5, and another that gave you 25 opportunities, you converted 20, right? I bet you that the person who's giving you a lead every day, it feels really great, but if they're not converting, right, it's really difficult to know that in the moment, right? Because getting those leads is what feels good, right? Converting it feels better, right? But you're constantly getting that validation from that business partner that you're their choice. But if for some reason those things aren't converting, those leads aren't converting, you won't know that until you zoom out and look at your big picture and have collected in some data warehouse the information about that conversion by a realtor that is actually going to give you the ability to create that focus and make the plan, right? Making a plan, I don't believe we can get too granular on it outside of these, high level philosophical versions of it, because it's you that will know where you are and where you want to go, and the different options that you have to get there. But I would just invite you to consider that the better you know your numbers, the more focused you'll be able to be on creating a plan.
Yeah, and I think to simplify this for those of you that are following along is, if we take the analogy of, hey, I need to implement a CRM. That's my goal. Okay. I need to know, what my numbers are and what the most important thing is. When you're making your plan, the way I finally bit this giant thing down into small steps was, look, I just want to get my leads in there, right? I didn't upload my whole past client database. I didn't do all that, right? But I was tracking my leads already on an Excel spreadsheet. Hey, I just want to get the leads into the database so that I can set a little drip campaign and go on. When you make the plan, break down the goal into tiny bite-sized pieces that you can give yourself a victory. Once I got that in there, I was like, okay, I now want all the milestones and the transaction management portion into my CRM, right? Another little bite-sized piece that you can do. So when you're making the plan on the goal, get these little victories, the sprint goals, as I call them, in your plan, so that you know what you need to do first and second and third, and make it really achievable, so that you can get some progress going forward.
I want to take a second to talk about diversifying your referral partner base and some of the ways that you might be able to do that. So first, I want to share why I think this is important. And the why really has to do with what I believe to be a imbalance in the way that as mortgage professionals, we've kind of looked at our businesses, and it's okay. It's not a judgment, right? Because I did the same thing. My business was 98% realtor referrals. So it was hugely out of balance from a diversification standpoint. However, what I realize now, and what I've been talking to a lot of other mortgage professionals, mortgage leaders about, and I think we can all see it and feel it, is that technology has started to move the consumer away from the realtor. And what many of you may have felt over the last 3 years, I know I definitely felt it, and I've talked to many others that have, that the ability to refer and the strength of a realtor referral on average has gone down. Meaning 3 years ago, Mark, you might have gotten a referral from a realtor that said, you must use Mark Robertson in order to purchase this home from me, right? You must use him or I will not work with you. And over the last 3 years, there might be still a handful of your very dedicated partners that operate with that mindset, but the population that really have leaned in that direction has started to dwindle a little bit. Would you agree with that?
And I think the current environment, there might be so much competition that your realtors are stickier than they really are. But if you think about rates going to 4% and then having a purchase environment where it's more of a equilibrium and not so much a seller's market, think of how sticky your realtor partners are going to be at that time. Future cast that. So yes, I would agree with that for sure. And I think that it might be a little nuanced right now. I've probably got more stickiness than I would have if it wasn't like, a multiple offer competitive situation on every single deal.
Right. No, great point. And the other thing I would offer as the why, and we are going to get into the how here in a second, is that once you are able to crack the code, and it's going to take a different approach than you currently have, because you know how to engage a realtor, right? They are party to the transaction. You know what they need, because they need the same thing you need, right? They need leads to come in, they need them to convert, they need to have a delightful client experience during the transaction. So it's very clear. But financial planners, CPAs, attorneys, that might be a little bit more difficult to find out exactly how you can add value to their business. And it's not as intuitive. However, when you crack the code, and you will if you follow some of the strategies that we have to recommend, and we'll continue to recommend as you join us on these calls, the strength of a referral from a financial services professional or a legal professional is so much stronger than the strength of the average realtor referral. And I'm not saying everyone, because I'm sure, and I know I did have some very strong partnerships that were awesome and that came the referrals came very strong. But imagine the call that said, hey, Mark, my attorney said I had to call you to refinance. Right?
Well, your attorney's right, Danny. Let's get that done.
yeah, exactly. Or hey, my financial planner said that you're the best person to help me build wealth through real estate.
Dude, right? I love it. It's also a more fun business, and it's like 100% conversion. It's very rare that I go into a financial planner's office, explain the value proposition, how I do business, how we're going to do business together, and I don't walk out with a relationship that bears fruit. It's unbelievable. It's very different from, the same meeting with a real estate agent.
So we're probably only going to have time to touch on kind of the scripting that you use for this, Mark, but I'll kind of set the stage of it. So we call it and I'm sure you're doing this now, right? The fifth page of the 1003, right? Where you start to ask questions that are not on the standard loan application. So you want to learn from your clients who are their financial services and legal professionals that are going to support and provide the ongoing infrastructure that's going to allow them to become a successful homeowner. You as the mortgage professional should be gathering that information and find out who they're working with and ask a simple question. On a scale of 1 to 10, how would you rate the service they provide to you? So this is their insurance agent, their financial planner, their CPA, any attorneys that they work with. So how does that script sound for you, Mark, when you go through it?
For me, it's a really authentic thing. I would say something, that I notice. Hey, Danny, I noticed you have a lot of money in cash, and I'm sure that that's because you were, planning to buy real estate, but why do you have so much money just, in your bank account? What's your philosophy there? And I would just listen to like what you had to say. And most of the time when I ask those questions, I'm not personally satisfied with the answer. And so that's a trigger for me. Like if I see someone with a lot of cash, immediately that's where my head goes. And then I'll make an introduction. And, so it would sound like, Danny, hey, with your permission, I want to introduce you to my financial planner, Alex. He is awesome. He's not going to sell you anything. Just meet with him and see if it resonates to be a fit. Because if you're anything like me, I was hoarding all my cash. I didn't know really what to do with it, but I also just didn't know where to start with a financial planner. And I think these guys are really awesome. And I think you should, take a meeting with them because I think you really like them. And I've made a lot of traction over the last 3 to 4 years, assuming they fit in Alex's box, right? And so then I'll just make an email introduction. I cannot think of a time when a client has been like, no, that I don't want to do that. It's very easy for me to refer that. And then I also have a different financial planner who's on the other side of the spectrum, and we'll take brand new clients that don't have any money and we'll help them save. And she and I have built up a really great referral, relationship with, and that script sounds a little differently. Hey, Danny, you and your wife are about to buy your first house. You're about to have a baby. There's so many things that you probably don't know on a financial perspective. And one of the things that I would really love to do with your permission is just introduce you to my financial planner, Mary, who does a really good job of taking families like yours and setting them up for success in the future. And she really understands real estate, and we work as a team together to make this the most successful transaction for you. There's no cost, no obligation. She's not going to sell you anything. As you can see, that's really important to me because that's how I like to be treated as a consumer. And same thing, I'll just make an email introduction and say, hey, Mary, this is Danny. I would really love it. It'd be a personal favor if you could just take a 30-minute meeting with them, scope out their situation, where they want to go, and provide a little bit of advice to them. And so, that's how the meeting starts. And inevitably, she's like, oh, they're investing with me. It's only $100 a month. But it's so simple. And then the reciprocation from Mary and Alex is, more than I can handle right now. So it's a very, very easy referral.
So I want to pull out, team, a couple of steps here, right? So the first one is you need to have business partners that you can refer to. So finding out whether it's your own personal financial planner, CPA, confirming with them that they're in a position to accept referrals, having a meeting with them and asking who is your ideal client. When I refer you, how do you want me to introduce you? Right? What's, is it via email, text, phone call? What do you want me to say about your business so that when they come over to you, they're already prepared and they've already built trust in your business based on my transference of that trust. And team, if you can probably read between the lines here, the next thing you want to share with them is, hey, if you ever have referrals, I'd like to offer you what I'd like you to say about my business, right? And how I'd like you to introduce me as a financial services advisor on behalf of your clients, right? So you're creating that reciprocity, and you're also guiding them on how to refer you. Because one of the greatest steps in improving your conversion rate is to filtering out towards your ideal client, and then making sure that the handoff is done in such a way that the expectations set with that future client meet what you're actually able to deliver, right? So you set those expectations on both sides. So let's say you don't have this group of people yet that you can then refer to. So asking that question, how do you rank your CPA, financial planner, a divorce, real estate, 1 to 10, insurance person 1 to 10, right? Wait for them to say they're a 10 and so, wow, that's amazing. I don't hear people give 10s to their, to their insurance agent that often. Would you mind if I reached out to them? I'd love to introduce myself. If they're a 10 for you, I might want to move my policies over. At the very least, I probably have other people that I could refer out to them, right? And then just that. And then if they're a 7 or below, like, oh, wow, I noticed you rated them as a 7. It sounds like there's some opportunity for your expectations to be met differently or better. Would you mind if I introduced you to somebody who my clients consistently rank as a 10, right? So now you're opening up a very organic and authentic conversation where you're now the hub of the wheel, right? So you are the one who are bringing the people together and then allowing their needs to be met by the appropriate professional to meet those needs. And you're now the hub of those conversations and the person making those introductions so that the families can have the best opportunity to be served over the long term and to build wealth through real estate.